here. Welcome, everyone. Thank you so much for joining us. Leads Referral Network is a community. We help build one another and help each other create long-lasting, sustainable relationships in our communities. So today, I'm so excited to have Charlie Meyerson here. Charlie is a CPA at Werner O'Meara. Did I say that right?
Yeah.
O'Meara and Company, where the focus is on the clients. They offer services from consulting and bookkeeping to taxes and financial planning. Charlie comes from a non-traditional background for a CPA. His first degree was environmental studies, and he spent the better part of a decade tending bar. His outgoing personality and years of talking to people from all walks of life comes out if you allow him to start talking. When Charlie isn't working or spending time with family and friends, you will most likely find him outside doing almost something. Awesome. I love your bio, Charlie. That's the whole bartending thing. I totally get that now. I didn't know that about you. That doing a job like that will just make you just a people person, totally. What we're going to do here before Charlie speaks is we're just going to do a quick little intro for everyone. I have met everyone here. I've got members. So wave your hand if you're a member, and we're just going to do a quick intro, business name, your name, and what city and state you're in. And then we'll have Charlie speak, and then we'll go into the speed networking. So I'm going to break everyone into private breakout rooms so you can chat one-on-one individually. And you'll have 2 minutes each, and so a total of 4 minutes. So if you can set your timers on your end to make sure each of you have an opportunity to speak. So, okay, that's just a little explanation of how the day is going to go. So, Tiffany, would you like to start us out with your intro?
Oh, sure. Tiffany Goff with Edward Jones. I'm a wealth manager, been recognized in Seattle Magazine 3 times as a 5-star wealth manager, and I'm in Seattle. And this is my book that just came out. It's been well reviewed, and it's a pretty fun little read. So that's what I do.
Awesome. Thank you, Tiffany. Anthony.
Anthony Upchurch with Legal Shield ID Shield, and I reside in Marysville, Washington.
Marysville. Sue.
Hey, Sue Charles. I'm working with Health and Wellness. I work with a company called New You Life, and I'm in Edmonds.
Edmonds. I love Edmonds. Awesome. Well, thank you for joining us, Charlie. So you have the stage. The stage is all yours.
Thank you. Good morning, everyone. Just one thing I always like to say when I start talking to a group, or I'm, starting to have a couple drinks and people start asking me tax questions, is this is general information. This doesn't constitute, tax advice to be relied upon. There are many, many people who can help you with that. Myself is one of them. So with that said, I'm happy to answer questions. I work with a very, very smart group of people, and we help people with a lot of different and a lot of complex tax issues. And so I can list off thing after thing about taxes if y'all want to be bored, or we can kind of just go with what people want to know about. So if you want to know about S-Corp elections, or what is deductible versus isn't deductible, we can cover some pretty broad, down to some relatively specific topics. And as my bio mentioned, if you let me talk, I will talk. If you give me 10 minutes, shouldn't be an issue. If somebody else participates, give me a couple hours, it shouldn't be an issue. So with that said, now out of the group here, who here is considered self-employed? Would be an S-Corp owner or a Schedule C owner? Okay. So then Tiffany, you're Edward Jones. So you then, do you receive a K-1, or are you an employee of Edward Jones? You got me muted, Tiffany.
Sorry. Whoops. I muted myself just in case I made noise. Yes, I'm a K-1.
Okay, so this stuff doesn't apply directly to you as much as it would for the other people in the room. And that is, I'm just going to kind of run over some basics of what happens when you start up a business. And I think y'all have businesses, so not a huge, not everything may touch home. The first thing that I tell somebody is to make sure you have a bank account for your business. You know, Tiffany, this could apply to you as well as something for your partnership expenses that are out of your pocket.
Well, it
and it
also
just makes
helps
things
because of my book too. So I'll listen to, because
Yeah.
I was on the fence of whether I should do an LLC for my book or not. So I'm curious to hear what you say.
So, so just in general business practices, having a bank account and a credit card, if you use a credit card, directly linked to the company, it makes things a lot cleaner. So when you hire a bookkeeper, whether you hire a CPA to do your books or just a bookkeeper, they're going to want to reconcile everything. If you've never done a bank reconciliation before, that's checking off every single transaction on the bank statement until you've proved to yourself, or more importantly to me, proved to me that it's correct, that you know what all those expenses were for, you've categorized them, all these fun things. I tell a lot of my clients to, get a label maker and label your credit cards. That label maker is a business expense. Like if you need it to do that, like that constitutes a business expense. So, if someone wants to know what constitutes a business expense versus what doesn't, that's a very specific conversation, but I can answer that question in just a couple minutes. Now, since y'all are business owners, but Tiffany, you did the book or are looking at how to make an entity formation or what to choose. Just when you start up a company, there's a whole bunch of paperwork that needs to be done. And most people aren't aware of this because they've never gone through the process before, or they've never hired somebody to help them through this process. And so if I were to start up a new company without even thinking of like my elections, I would need to get an EIN, which is an identification number provided by the IRS. You use it for things like payroll, your business tax return if the business has a tax return. You need it in order to get a bank account for the business, because you don't want the bank account in your social security number. You want it in your business's EIN. And that is for a level of protection that somebody who practices law can describe a lot better than I can. There's things like your filing with the Secretary of State, registering with the Department of Revenue. If you're a partnership, the partnership agreement, these things are all extremely important to have access to. The Department of Revenue, for example, you need a physical piece of paper from the Department of Revenue in order to just set up the account to pay your taxes. If you don't have that, you can't pay it, and then you'll get late penalties, which are, I don't want to call them aggressive, but they are hefty for what they are. And they're percentage based. But an example of paperwork that came up very recently that we had a lot of clients go through was for these PPP loans. And if anybody wants to know about PPP loans, I've got days of literature and weeks worth of talking. They asked for the entity formation paperwork. And if you don't have that and you've been around for 20 or 40 years, they're not giving you a loan if you can't supply them with this piece of paper signed saying this is the date that we were formed, this is our partnership structure, whatever it was irrelevant to the actual loan, except it was required for the application. And so it's easier than ever to store your information, but it's also as important as ever to store that information. So that's my big shtick on paperwork. The next thing that I always try to talk to new business owners or small business owners about is deadlines. There's a ton of them. I recently was having a conversation with a bookkeeper I work with about deadlines, and I was like, oh, there's plenty of them. You need to, I have my clients mark them all down. We get calendar stuff set up if, we're helping with these things. And so we talk about them. And then we talk about how many they're actually on. And so just the big ones. So everyone here is in Washington. So you at least have an annual filing for your Washington B&Os. You have up to 12 of those, depending on what you do, what your gross income level is. There's municipal B&Os, which are, I think in Washington, they're all annual or quarterly. There's some states and local municipalities and other places that have them monthly. You have a PPA, which most people don't even know what that is. You have quarterly estimates if you're a Schedule C or you don't like to do withholding, that's just on your personal stuff. Payroll can be anywhere from weekly to annually and everywhere in between. Federal returns and state returns. And, those are just like the big ones that we see with a lot of people. And I like to stress the importance of understanding these, being aware of them, because there's nothing like collecting sales tax from your clients and then realizing that you owe thousands of dollars to the state that technically was never yours. It's what's called a trust tax. You've collected that on behalf of somebody else. It's just like when you withhold payroll taxes from somebody's paycheck. That's not your money you're paying. It's somebody else's money. It never belonged to the business owner. So those are my big deadline talks. And then the next one, kind of move into general advice I give people, would be a home office, if you can have one. Everyone has one now, right? What they consider a home office. I don't think anybody's really going to their office. If you are, I'm jealous. I'd love to have my desk. I see that, Tiffany. Thank you for rubbing it in. If you have a home office, it allows you a lot of expenses that you don't otherwise get. Now, you have to have what is actually considered a home office by the IRS for it to be deductible, and that is a space. The primary definition is that it's a space that has to be regularly and exclusively used for business purposes, something very close to that language. There's a whole bunch of other, like possibility rules because it's the IRS and one item wouldn't be fair. And what that really means is that, like I'm in my spare bedroom. This is not my home. Take naps and watch TV in here. This is also my closet because the closet in our bedroom isn't big enough for two people. And so I don't have a home office. Now, if I had a home office, I get to write off, a percentage. So if I use 10% of my square footage, which would be about 100 square feet in this house, I would get to write off 10% of my utilities, 10% of my mortgage interest, my real estate taxes, things that I would do to upkeep my house. I would also be able to depreciate my house. And so this is a great business expense that a lot of people incur, but they don't take advantage of. And by taking advantage of this, you actually end up with the ability to deduct additional business mileage. Because if I was working at my home office and I went to go see a client, I'm not leaving my home. I'd be leaving my home office because I'd be prepping for this meeting. And business mileage is only deductible between places of business. So commuting from your home to your office doesn't count as miles driven for work, but going from office to meeting or meeting to office does. But basically to and from your house doesn't constitute commuting, or I'm sorry, doesn't constitute business mileage, that's commuting. There are some very explicit, unique rules on what does constitute commuting for temporary workspaces and things like this. But they're really intricate, they're really unique, and I don't see them very often. My firm doesn't see them very often because there's so much nuance to that law. If you really want to, I could direct you into the Internal Revenue Code to read about it. I don't recommend it. It's not very good reading. If it applies to you, it's great information. It just probably doesn't. So with that said, if you do have a home office or you have business mileage, track it. It's somewhere around 50, I think it's 57.5 cents per mile driven in 2020. It's like, it doesn't seem like a big number, but for real estate agents who are driving, 10, 15,000 miles a year, it's just thousands of dollars expense that you get to take against your income and you don't have to own your car in the business. Now, if your business owns the car, that's a different story. You want to track your mileage, and then you also have to report your personal usage on your W-2. Not an overly difficult process, but it is a specific reporting requirement that a lot of people miss out on. And you can no longer trade your car in a like-kind exchange and defer the tax like you used to be able to. So you used to be able to have a business car or truck, and when you're done with it, you just go trade it in and you depreciate it, but they'd give you $10,000 on the trade-in, which on the face of it, or not on the face of it, currently, when you do that, you actually recognize a $10,000 gain on your vehicle that you would be taxed on at a depreciation recapture rate. Whereas a few years ago, you used to be able to trade it in and you wouldn't have to pay taxes, and you would just lose that $10,000 as basis on your vehicle. That's a really technical topic, but it is a tax spot that we've seen people kind of get themselves in a pickle, because this tax law that went through at the end of 2017 changed the way that like-kind exchanges were done. And so now they only apply to real property, which means real estate. Personal property, cars, equipment, stuff like that, no longer eligible. So yeah, let's see, what else do I have to talk about without rambling? So, we were talking about auto mileage, and I ended up on like-kind exchanges. So this happens. So the big thing is to track your expenses. You know, people will give me their QuickBooks, and I believe, you know, my job isn't to question everything that you tell me. My job is to make sure that we understand what the reporting requirements are, the retention requirements are, to help you understand what substantiates a business expense, and to help you make sure that we're recognizing all of the business expenses. And keeping that documentation is extremely important. You know, I'm actually not allowed, it is prohibited for me to give advice based on the likelihood of an audit. That's part of my licensing. There's a question about that, I think, in one of the ethics exams, maybe both of them, because there's more than one. And, you know, regardless of audit percentages and how aggressive something is, you know, if I were to go out to grab coffee, let's say Anthony and I are like, you know, let's just go have a meeting, I'm going to take you out to coffee. That is business meals. And I can write that off. I'm able to recognize 50% of the expense as a business expense. But I need to have that receipt, and I need to have who it was with and what we talked about. So I'd be like, well, with Anthony Upchurch, we discussed, you know, what it looks like for somebody to become my client, as well as some items around S-Corp elections and general business topics. So with that information, I now have a substantiated receipt for a business expense. I'm, to be honest with you, I don't think that everybody keeps that record. You know, people would say, you know, Tiffany, you may bring, you know, Starbucks into the office for everybody, and, you know, you should keep that. And we had these, we chatted for 10 minutes to start the day and about general business stuff, and went on our days, and that becomes a business expense. Whereas me with my credit card, just have my credit card here, and it has, you know, like there's, well, it's more like that, my list of expenses. But I can't just say like, oh, all the Starbucks and all the, you know, I went into the grocery store and I picked up, you know, a food platter for a thing. Like, I need to have an itemized receipt. I can't just show you this is what I spent. And I need to have some information about it. So that's kind of, you know, part of my job is putting fear into people. That's, you know, that's one of the things we talk about, is retaining information, retaining documentation, so we have the information available, I should say. Yeah, and so there are the programs that people use, and I highly recommend that you use bookkeeping software if you don't have it. They allow for storage of information. So QuickBooks and QuickBooks Online are the two most bookkeeping softwares from my understanding. They're also the two that I encounter the most, so I'm the most familiar with them. And I believe they have places where you can like attach your receipts. So you put your invoice in, and you can attach a copy of the check going out if you're handwriting checks, or you can put your, book your receipt for coffee, and you can scan up, with an app or with a scanner if you have one, and attach it to that expense. So it's ultimately there if you ever needed it. That's a lot of legwork, to be honest with you, but it is, it is what the code says on retention, is that you need to have it. So that's a big one. And on the topic of bookkeeping, I highly recommend, if you don't feel comfortable with your bookkeeping, or even if you think you're comfortable with your bookkeeping, is consulting with somebody or hiring a bookkeeper to help you with that. It is an amazing process. I recently spoke to who is now a new client who has QuickBooks, and their opinion of what is clean QuickBooks and what my opinion of clean QuickBooks are extremely different. Mine means it's reconciled with no outstanding items that shouldn't be outstanding. Theirs means it's been reconciled maybe, or it's about right. If I were to do bookkeeping, I don't like to accept things like reconciliation discrepancies, which basically means like, this is a positive or a minus to the bank account that we don't know what it is. We can't figure it out. And they're okay to have. I mean, if they're de minimis, if they're non-material items, they happen in life. I've seen them happen at, companies with $100 million in sales. Like, yeah, we're not going to go chase, $13. We're not. But having that training, or having that person who actually does this for a living, it really helps. It helps with the process. It helps with the cleanliness. And ultimately, I like to recommend bookkeepers because that's what they do. I do bookkeeping. I'm good at it. I'm not extremely efficient at it as a professional bookkeeper would be. My rates are also more than most bookkeepers that I know. So I would prefer that my clients are utilizing my services for what their greatest benefit are. And that is taxes, tax planning, for businesses and for individuals, and kind of understanding the impacts and all the concepts of what they're doing. So when they say, Charlie, construction company, like, I bought a forklift, what's that mean? I prefer the question of, Charlie, I'm thinking about buying a forklift. What would that mean? It's a lot easier to fix things before they happen, as opposed to afterwards.
Well, Charlie, how about this?
Yeah.
How about we break into the speed networking so we don't run out of time, and then if you don't mind staying after, and if anyone has any questions, then I just don't want to run out of time for the speed networking. So I'm going to start that. And thank you so much. That was so awesome. I have tons of questions for you. So.
Yeah, feel free.
So I hope you can stay after and answer some questions. So, all right. So we are. Oh, Tiffany, where'd you go? Tiffany, you're here. Okay. So, oh, there you are, Tiffany. So you guys are broken out into the breakout rooms. And so just join and then stay in your room, and I'll rotate you after every 4 minutes.